Good afternoon, traders. Hopefully, you're enjoying the lectures. And so far, we have uploaded 5 free lectures about the advanced trading course. And just go to the watch playlist, and you will find, and you can simply watch them right from the lecture number one. Okay, so this lecture is going to be lecture number six, and as you can just understand from the title, that today we are going to cover the market structure, and I will tell you that which liquidity levels have a most important contribution in the market. And the second thing that we will catch in this lecture, I will tell you that there are some close liquidity levels which are basically a trap for the retail traders, and we will cover that for the next time, how you are going to save yourself from such traps. Okay, so this is very easy, and I will try my best to cover each and everything about the market structure, and I will not be going to take you towards the conventional methods regarding the market structure, because mostly we knows that just we only know about the market structure, higher high and lower lows, and that's it. But let's not dive directly into these conventional concepts, and I will tell you that which market structure is most important in terms of liquidity. Okay, I again repeat that I will tell you about the market structure which is most important in terms of liquidity, and we will not care about the other factors, right? Okay, so first of all, it's a request to my traders who are watching this video, that if you, because this is the lecture number six, and if you have not followed my course exactly from the lecture number one, then please go to the playlist first and start watching these lectures from the lecture number one. And I have a challenge here, that I challenge everyone, just watch the lecture number one, and if you will not start making money, then it will be definitely your fault, because the methods that I'm giving on YouTube for free in my lectures, they actually work very well. And you need to just because my other students, they are sending me the screenshots after watching the lecture number one. When they have completed the lecture number one, they have implemented the strategies on the live and the demo accounts, and they started making money from the lecture number one. And those students who are watching the lecture number one to lecture number six, and they are very serious, because if they are they don't want to see the random videos on YouTube, and they want to have a proven methods, and they are watching my lectures from lecture number one to lecture number five, they have started making money. Just go to my Telegram, you will find a lot of reviews from my students. And even with a short time, like I don't have a much time with me all day, so still I have shared some of the success of my students, but there are a lot of success by my students that is already pending on my side. Okay, okay, now we will learn about the market structure. So basically, this is the gold 15-minute chart. Okay, so I'm just going to make the few points like this. This is the higher high, the market has made a higher high here. Okay, and similarly, look, just I will just let you understand with the market structure, that when the market is into the uptrend, then what it normally happens. Okay, so it makes the higher high like this. Okay, right? Okay, similarly, this is the higher high, and then when the market makes any low point, this will basically become a higher low point in terms of the upward trend. Okay, I again repeat. So guys, like, just look at the trend, it's going up. So in the uptrend, the market will always make a higher high, and it makes a lower low, and then again it goes to make a higher high. Okay, so for example, look at this one. This is uh, uh, this is another what is this? This is another higher high, because if you just look at here, it's above that point. Okay, just look at this. If we compare the 2 points, it's basically above. Okay, similarly, it has made a higher low here. So this is how basically we judge the market when the market is going sorry, not yes, higher low. Okay, so I'm not going into the big detail about the higher highs and higher lows, because you guys know very well about it. Okay, so the uptrend is in formation, uptrend is formation. Okay, so this is another higher high, right? Okay, so just watch this lecture with a relaxed mode, because if you will panic, if you will skip, then you will not understand my points. Okay, so this is another high high. Okay, so this is another. If we talk about this, this is another higher low, right? Okay. So the market is continuing simply. You can see again it made another higher high. Okay, I'm just going to write the proper ones, which are very very clear, and you can see this is the, okay, let's directly take the text and just write this is the higher low. Okay, so another one, that is the formation on gold. This is our another higher high. Okay, so what do you assume right now? The market is simply going into the upper trend. Okay, now I'm just going to tell you about that, how basically, because as I have told you from the lecture number 1, that the market basically moves on the basis of the algorithm. So this is what done, this is what happened is already done by the algorithm. Okay, it has the inputs inside. Okay, now, when you see the market has made a higher high on gold, okay, then you can see we have seen the downward trend. Okay, okay, now just compare this one, like for example, this higher high and this higher high, when the market makes and completed a higher high process, you can see we definitely have a retracement, slight correction from that level, and even we have seen some correction from that level. But you can see this correction is getting long, it's coming more down, more down. Okay, so why? Because first of all, when you see the correction is coming more down, first of all you will mark the okay, now first of all let me delete the previous all drawings. Okay, now when the correction is getting long, like because we have the immediate support level here. Okay, I'm going to zoom out my chart so that you can understand. Okay, so this is the sport level for the retail trader. Okay, I will write SUPP so you will understand this is the sport level for the retail trader. Okay, so first of all, when the market is coming down, so what was expected, retail trader was interested to take a buy position exactly from this level, right? Okay, so first of all, the market has taken the liquidity that was available below, because their stop losses were available below this support level. So first of all, they are hunted, and still it doesn't stop. So it basically, now we have a proper we have two levels here. Like if I make a smaller level here, you can see this is another sport, and if I extend that level, then you will realize that we have a very close immediate sport like this one. Okay, so this is the another sport, and this is the immediate sport that is available. Okay, now guys, just look at this long green candle that I have set up here. That was the trap. Okay, because by looking at this green candle, what will happen, the retail trader will immediately take its buy position, and their stop losses will remain just below, because this is the normal routine of the market, because the retail traders will intentionally set up the stop losses below that resistance. So now just see what happened. So when they have shown you a trap from the exactly from the sport, so let me write this one because otherwise you will be confused. So this is another sport. So first of all, just understand the process. The market has liquidated the first retail traders who were sitting here by looking at this higher low, because this was the higher low point for the market on that time. So their stop losses were available, because when they have taken the buy position from here, their stop losses were prevailing below that level. So hit that one, the market hit and eaten their all stop losses. Okay, then it was not satisfied. It continued to be down further, because it was targeting that sport area and this sport area. And now just look at this, the market has liquidated even the traders who have taken up buy positions on that level. And I have shown you that this bullish candle was a trap, and even you can see the two retracement. And because some, it's not I mean, it's not 100% that on the one bullish candle they are satisfied. Okay, so just look at here, they have shown you a couple of bearish candles, and again they have shown you one more trap candle here, the green one. And then after when they have satisfied the retail traders that now the market wants to go up and going to make another higher high from here, then they suddenly drop the market, because the market always come to hit your stop losses. It has nothing to do with the support and resistance. Yes, it has to do with the support and resistance only to hunt your stop losses. Now you can see it was coming down. So those who were even buying from here, and those who were thinking, they were also, because their stop losses were available below. And once the market has taken their stop losses, now you can see we have seen a simplest ride over there. Okay, now uh, just look at this one. Okay, now this is the point where the market has sorry, now let me delete the all drawings first. Okay, so if you have watched my lecture number 2, I have discussed about the liquidity pools. So just understand what is this. uh, this is the this is the liquidity pool area. Okay, I'm just writing, this is the liquidity pool area, right? Okay, so now just look at the cleverness of the market, that how clever it is, that what how basically it plays with us. Just look at this. This is another. Okay, because the both sides, I'm not talking about the one side, the both sides have become the liquidity pool area. Okay, so I have given you a definition of the liquidity pool area, where you have multiple touches. Like, just look at the upper side, one touch, two touch, three touch, four touch, fifth touch, and just look at the lower area. This is the first touch. Okay, first touch, second touch, third touch, and even fourth touch. So this becomes the liquidity pool area. Okay, now I'm going to tell you, because this is the market crack that I'm going to show you. Okay, so now just imagine when this is the liquidity pool area. So what is this? In other words, this is the resistance. This is the resistance liquidity pool area, because for a retail trader, for not for the banks. Okay, so just understand. Okay, so that's why I say, if you watch these videos, you will be not on the losing side. And I give very good techniques in my private mentorship. I have only 1 hour mentorship. That's not a time waste. My students have taken my mentorship, and now they are enjoying with the trading market, because they know a very good sense. Okay, now why I say the market always come to hit your stop losses, because I'm going to prove on the charts as well. Okay, now this is the resistance liquidity pool area, and now this is the sport liquidity pool area. Okay, now just look at this. If I extend that part, okay, if I extend that part, so those who were actually selling at that resistance, okay, so they have again sold on this red trap candle, this red trap candle. So where would be their stop losses? Definitely a common sense. If you're watching my lectures from lecture number 1, their stop losses will be available at the top. Now you can see the market has basically hit. First of all, it has created a situation to build the interest uh, of the traders, of the retail traders, that this is the best resistance, but this is the best support. But how? The market is not only going to respect these support and resistance levels. This is the trap. Whenever I see the trap like this, I just open my mind and see which side the liquidity is going to be taken. So it breaks up, it has taken the liquidity. Okay, now you got a bearish candle from here, so now that's a good sell point of view. Again repeat, this is the good sell point of point for you, because yes, either if the market has a choice to hunt the upper side liquidity, but this time the market was losing the momentum, and it was completely sure the market is coming to hit the stop losses that are available here, because those who were buying from this sport, so where would be their stop losses? Their stop losses will be sitting just below that support level. And now you can see what happened exactly. The market has taken their stop losses, and now this is the good time to buy the gold. Yes, if you go for my private mentorship, I have a very good techniques, that why this is the good time to buy gold. There are many ways. So because I cannot explain each and everything in my free videos, this is not good, because the data will go to the banks, and we don't want the banks to let to understand our strategy. So there are many ways, and that I only teach in my private mentorship. But for the common sense, just look at here. Now I'm going to give you a more eye opening. Okay, so the market has taken the stop losses on the upper side. It has even hunted all of the traders, even you can see there was another support level here, the market has taken the liquidity from here. And even just use your common sense, this is another sport area, and you will see one thing. Just let me extend that one. Okay, and let me extend that one, and you can see. Okay, just you can see the market has also taken the liquidity from that area. Okay, now it has started to go into the upward side, so there are more likely chances that this is the valid this is the valid gap. This could be the possible target, because the market can go to target this area. Because why when the market has received the sell pressure from here, so this becomes a resistance for the retail trader. So this is now the resistance for the retail trader. So what will happen next? If the market goes continuously up, and if it goes to that level, so I'm going to remove the target one, so this will become the resistance. So what will happen? Oh, sorry, those who will be selling from here, even if I extend that part, you can see we have two resistances that are very close to each other. Just look at this one. Look, the two resistance. So this whole area becomes the resistance point. Okay, so what will happen? Their stop losses will be available when they will be selling in that zone. Their stop losses will be available at this one. Okay, now why I have told you about the market structure. Okay, so why I have told you that this is the higher high and higher lows, and now you can see the market. Because what this is, if we talk about this level, the market has made, the market has made the higher low, higher low here. Okay, why it has made the higher low here and lower high here? So basically it is coming to like your market structure has nothing to do with your trends. Okay, you need to understand that the market is not like the market is making the higher highs higher lows. It doesn't mean that every time it's going to make the higher highs and higher lows. It definitely comes to hit the liquidity. Because now if the market is going from there, now just see, if we talk about this drop that is happening from here to here, so why this drop is, why there is a downtrend here? Because it is not only behaving based on the higher highs and higher lows, because the market definitely care about the liquidity. Okay, now I'm going to show you one more example. Look, this is the random chart that I have opened. This was by god, this was not any pre-planned. I have just opened a random chart. Now just look at this. Okay, now just look at this. The market was making the higher highs higher lows, and it was going up, and suddenly you start seeing that the market starts to make the higher lows, and it starts to make the lower lows. So it started a downtrend. Okay, so what will happen? The market will definitely go down, and the market is basically coming to hit the stop losses. Okay, now just imagine where the maximum stop losses are available. The maximum stop losses are available at this level that you can see. Okay, hopefully this concept about the market structure is very clear to you, because it's not about the formation of the higher highs higher lows and nothing like this. You need to be very careful in all modes. Okay, so I will give you the trick in the next video. When I will be uploading the lecture number 7, it will be a big trick for you, and you will definitely enjoy, because I will reveal another thing that is going to make you successful. So watch the lectures from lecture number 1 and enjoy the lectures, and our indicators are very great and fantastic. And you can even book my market turning points indicator. Just go to Telegram, the link is in the description. Thank you very much.